Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. Let's get into the action today. Markets, again on this Thursday, January 23rd, 2014, are taking a beating. They are bouncing off their lows here as we enter the last hour and 15 minutes of the day, but what a down day it is. And again, if you've been listening to me, I've been choreographing this exact move down. And by the way, it is not done. All right, S&P 500 down 21 points, Dow down 210, NASDAQ down about 40 on the day. Well over 1% on pretty much every index except the NASDAQ, which is down just shy of 1%. Markets are getting a little bit of a bid, but the 20 MA right here in the short term is going to be a little bit of a problematic area. And again, folks, how did I know this was coming? Why have I been talking about being bearish on this market? Very simple. Here's your December 31st high on the market. All right, that high has held the test of time. We've tested that multiple times. I repeat, multiple tests in the new year, including a week ago from last Wednesday. All right, you pierced it right here, and you couldn't close above it. All right, then what happens on Tuesday? We gap up right into that general area and get slammed down again. All right, every sign that I was looking at, whether you're talking about margin, all right, everyone know what margin is. Margin is the amount of money that you can borrow to buy stocks. So you can have a margin account. When you day trade, you have 4-to-1 margin. So get this. Margin levels right now, all-time highs. Higher than in 2007, which was the last peak. What happened after 2007? Markets crashed, right? What happened in 2000, the last time you had a high before 2007? In 2000, the dot-com bubble burst. NASDAQ went from 5,000 to about 1,200. All right, you're at new all-time highs, even higher than 2000 and 2007 on margin. That's insane. All right, in addition, the charts were telling us this because every time you got up to these highs up here from December 31st, which was right back here, every time you got up in that range, the market was getting pushed down. That's called distribution. That's institutional selling. Right, that's where the institutions are saying, I don't want to be in this anymore, so I just want the little guy to be buying so I can sell right into it. So every time it gets up in these ranges, let's just smack it down. All right, this does not take a genius to see. I teach my members to see this all the time, and I've been telling you it's coming. And again, it's not over, folks. It is not over. You will see bounces because the buy the dip mentality is there, but I believe the all-time highs in the short term are the highs. And you will see this market pull back. And yeah, you're going to have bounces along the way because, again, the average investor has been programmed to buy on dips. But it will just be that, just a small blip on the screen back up before more selling comes in. All right, everything according to what I'm seeing, whether it's cycle analysis, whether it's technical analysis, whether it's distribution, whether it's margin, doesn't matter. They're all pointing the same direction, and it is not a very pretty direction. So beware. I warned you over the last couple weeks. I warned you again today. Instead of losing money on it, make money on it. Right? I've even been on my radio show on 8:20 a.m. News Talk Radio here in Florida. I've been talking about this on Sundays in my hour show. I've talked about it twice when I'm on during the day, every day, Monday through Friday. I've been telling everyone listening on the radio, be bearish as long as you don't close above 1850 on the S&P 500. Told my members we've been shorting plenty of things, so as the market comes down, we're going to make a lot of money. Just got to know what to do, folks. You got to know how to read the charts. You read the charts, you make money. It's bottom line, basics. Here at InTheMoneyStocks.com, I teach you how to do it. Methodology Revealed course, Elite Keys to Unlimited Success course. You can join the Research Center. There's a free trial for that. And you can basically get 7 days free of all this insight, trade alerts, and so forth. One of the trade alerts I gave out last Friday, VXX, which is the VIX tracking ETF. So volatility, I knew volatility was coming. We bought it. VIX, VXX up $1.70 today. All right, that's been a good one. There's been some other ones as well. One of them recently, Yahoo. Yahoo's down another $1 today. Dead on short call right up here, folks. Dead on short call. And this, again, is going to have some support around the 50. And another one we talked about, falling Win. Win has collapsed. Down $12 in the last 3 trading days. That's a big, big drop there. It should go a little bit lower to that 20 MA before it gets a small bounce as well. All right, this stuff is happening, folks. If you're late to the party, if you didn't know this was coming, you got no one to blame but yourself. All right, the media is going to pump the market. All right, the ignorance of the average investor is no excuse anymore. All right, I've told everyone. I divulge everything. I spill the beans. All right, if you're listening to the media, they're always going to be on the wrong side. Same thing with analysts. All right, when it gets to that crazy roar of bullishness, that's when the markets are topping. When you get that fear, like in 2009 at the lows, that's when the bottom is in. You can't get carried away. You can't let emotion take control. As soon as emotion takes over, you're going to lose money. Just that simple. Might as well just, give it away or go spend it or blow it on something, because you're going to lose it anyways. It's going to go right into the institutional pockets. And that's what it is. The markets are a transfer of wealth from the intelligent investors and the institutions the money comes right from the small investor who doesn't know anything. And really, again, I'm here to teach it, so there's no excuse anymore. You can't keep your head in the sand anymore. You got to know this stuff. All right, SPY, folks, getting a little bit of a bounce again, minor bounce. But again, markets are still down substantially here on the day. One of the big things I'm watching here is this pivot low right here. We almost got to this gap fill. I'm actually a little surprised we didn't actually fill that gap, to be honest. That gap was at 181.75. I would have thought we would have touched that before a little bit of a bounce, which makes me actually think that tomorrow they might flush it in. If we don't hit it today, I think tomorrow they could flush it in there, and then maybe even a little bit below into this double bottom. That's probably where we end, though. I don't foresee us really breaking this low before next week. But once next week comes, anything is possible. Ultimately, where is this market headed? First major stop is going to be this area right here, 177.50. I've talked about that literally for months now. That is the big level, and that's what you should be following. All right, on any sort of sell-off, 177.50 is going to be the first major support. You should get a major bounce off of that level. But then again, eventually it's going to be taken out and go down lower. All right, couple stocks in motion today that are getting slaughtered. Anything China-related, BIDU, look at this. Lows of the day here, down $12.50. Why is this down? Well, one of the things that spooked the markets, and there's a bunch. Argentina is a scary thing right now. China's economic news last night spooked the markets. There's a lot going on here that's kind of rearing its ugly head. And the beauty of it is the charts told me this was coming, but I didn't know it was going to be, the catalyst was going to be China or Argentina or anything else. I just knew it was coming. And I knew when it was coming this week, and sure enough, it's here. And that's the beauty of learning how to read the charts, is that you're not going to know specifically what the news is. You just know something's coming. All right, put my shorts on, put my longs on, whatever you got to do. Protect yourself. Go long or whatever. You can do it. And that's the great thing about what we do here, folks, at InTheMoneyStocks.com. It's a powerful thing. Amazon's down 6 today. Apple's actually bucking the trend, which is kind of interesting. One of the reasons why the Nasdaq's probably a little bit stronger. But see this trend line here? As long as Apple's above this trend line, Apple's probably a bullish case here. And sure enough, this is your possible target on Apple up to this short-term 575 level, about $20 higher. Google's down a little bit, but not that much. I'm seeing the major losses in the Dow stocks and the S&P, like JPM, for instance, which is a Dow component. Take a look at this rollover. Earnings were right back here, not that great. Had a little bit of a pop a couple days after earnings, and then look at this collapse, folks. By the way, where's this thing going? Right here. This is the area where JPM is going, right there. All right, Goldman Sachs, take a look at Goldman. Ugly rollover on Goldman. Where's this thing going? Let's zoom out and take a look. Interesting with Goldman, because you actually have a little bit of a level right here. Interesting level, and you actually tagged that level today. I wouldn't be surprised if you see a little bit more selling, but for the most part, you could get a bounce right in this area since you just hit this pivot high right there. All right, other stocks are getting hammered today. Take a look at Chevron, down over $2. Had a small bounce off this upsloping trend line, now getting hammered down again. Next target is going to be the 117 level. 117 level, then the 115 level. All right, so some big moves. Boeing is taking a beating, down over $3. All right, FedEx down $2.50. That was a nice bearish inside bar consolidation right now. Now the 50 MA's got to be broken. Once that gets broken, this thing is going to get absolutely annihilated to the downside. So there's lots going on here, folks. A lot of price action, and let's not miss out on some of the stocks that are performing well besides from Apple. Netflix had good earnings. That's in a class of its own right now. One of the few stocks to actually go up on earnings. Not many out there that went up on earnings. Netflix is one of them. They're having a very nice move to the upside. McDonald's had earnings this morning. Earnings weren't bad, but earnings weren't good. but the market expected them to be not so good, so the stock's actually up 34 cents today on the day. So right now, anyways, we're seeing the markets continue to be extremely weak, although bouncing off their lows. And again, if we just flip back to the intraday chart of the SPY, we just came into the 20 MA. This is going to be a little resistance here. These are the pivot low, and then therefore pivot high. But yeah, for the most part, markets under a lot of pressure. Bottom line is, folks, you just got to be on the right side of the trade, no matter which way it's going. You got to be on the right side. So I will now digress and move on here, close off the video. Come join us here at InTheMoneyStocks.com. Again, take the 7-day free trial to the Research Center.